Hey folks, this is Don Graves. I've got my good friend Robert Klein on the call with me today. Bob, you wrote an article that just came out yesterday, 5 key metrics when evaluating a HECM reverse mortgage. And I got to tell you, it's one of the best articles I've ever seen written by a financial advisor around this subject matter. Thank you so much for what you're doing. Before we talk about that, can you tell the audience a little bit about who you are and what you do?
Yeah, before I do that, I just want to thank you, Don. That means a tremendous, that's a lot, means a lot to me coming from you, and I really appreciate that. My background is I've been working in the retirement income planning arena, specializing in that for the last 12 years. I have a CPA, CFP, retirement income certified professional designations, amongst others, and just began specializing in the reverse mortgage area about a year ago when I was going through your program on housing wealth.
Mm. And I appreciate that. The article was man, 5 key metrics, and you use kind of Olympic metaphor for this. But why did you write this article?
Basically, because I was looking at the reverse mortgage industry like other people out there before I got heavily ingrained and educated about it. Just looking at a couple of things, hearing different things, including things that turn out to be myths about the reverse mortgage industry. And I saw that while people like you had a defined process when you meet with clients, the average consumer didn't really have exposure to that unless they met with somebody like you. So I wanted to write about this process. It's an analytical process that includes 5 metrics that it's, if you're into the numbers, it'll definitely help you understand what a HECM is and how to use it and some potential strategies.
One of the things that you outline is the truth that baby boomers or those coming into retirement, the majority of them are going to have a mortgage, second mortgage, home equity loan, or line of credit on their property coming into retirement. And you really unpack how do you kind of manage that? And that's, you spend a lot of time around the metrics and weighing a reverse mortgage, a standard reverse mortgage, and something I talk a lot about, replacing your existing reverse mortgage, your existing mortgage with a reverse mortgage and continuing to make a payment. I've never seen anyone, a retirement income practitioner, do those analytics. So thank you so much. How did you begin discovering reverse mortgage? What was kind of your entree into the world of reverse mortgages as a retirement income planning tool?
I can't recall my exact moment. However, from attending various conferences and reading different things, and it was certainly emphasized by you and hit home about the point that home equity is, most people's largest assets. It's, comprises 50% of their assets, and most people just simply aren't tapping into it when they retire, and it's going unused in many situations because people just don't understand how it can be used and the benefits of it, the strategies, the tax savings aspects of it. So it's been a big learning process, and once again, you've been a big part of that, Don. Thank you.
A lot of advisors are reluctant to talk about reverse mortgages. Why do you feel that is?
I think it's similar to their reluctance to talk about fixed income annuities. It's just simply lack of education and exposure to it. And some of them just, they're doing certain things. They have a certain business model, and there's only so much time in the day. And unless they make a dedicated effort to learn about it, I think that's really what it comes down to.
Mm. One of the questions I ask is to advisors, what percentage of your clients who are at or near retirement do you honestly think would have a need of a reverse mortgage? And typically, when they're being honest, would say 5 to 10%. And then I said, well, what percentage of those are 100% certain they'll have a great retirement? Not what we feel, but what they feel. And that's usually a small number. Now, here's my third and final question. I say to the advisors, if there was a proven strategy that allowed those clients to increase their cash flow, reduce their risk, preserve assets, improve liquidity, or even add new dollars back into their retirement savings, what percentage of your clients would want you to tell them about that? And advisor said, well, Don, 100%. I said, exactly. I said, that's what the newly restructured reverse mortgage is designed to do. Cash flow, reduce risk, preserve assets, improve liquidity, add new dollars. A lot of advisors have a perception about what the reverse mortgage is and does. And what your article did, and I just want to commend you again, is it dispels some of those misconceptions. It updates, I would say, maybe some outdated thinking, and you've done a great service, Bob. I appreciate you so much. Final question. How do advisors learn if they're saying, okay, I hear you, how do I begin to learn about these strategic uses for retirement income planning? What would you say?
A couple of different things. You've written 2 great books, one for the advisor and one for the consumer. I would suggest advisors take a look at both of those. That's a fantastic place to start. And then you sponsor the Housing Wealth Certificate Program, which I went through, which was extremely beneficial. So those are just 3 opportunities that are out there. There's webinars if they're interested in that approach. There's just so many educational opportunities, but I would encourage all advisors, no matter what they're specializing in, to get exposure to it to the extent that they're promoting themselves as retirement income planners, financial planners, et cetera, because it's really negligent not to have a knowledge of it. It's, as I point out in the article, it's not right for everybody. And you say that yourself. You say, if I recall correctly, correct me if I misquote you, but it's worth the conversation, that it's something everybody should be thinking about in every client situation to see if it potentially fits in, if they should be presenting it to their clients. And, it's just one of those things. It's an essential part of the retirement income planning process.
Bob Klein, thank you. Where can people find you? What's your website?
It's retirementincomecenter.com. And I also have a YouTube channel with the same, it's Retirement Income Center. You can find me on YouTube as well.
All right, folks, you had that, retirementincomecenter.com, or YouTube, search Retirement Income Center, Bob Klein. You have been fantastic. Thank you so much, my friend.
Thank you, Don. Thank you very much. Always enjoy talking to you.